Doesn't it make sense to invest in a growing city like Charlotte, North Carolina, where we have a Major League Soccer team, NFL team, Carolina Panthers, also an NBA team, the Charlotte Hornets. Shout out to Buzz City. But just because we have everything here doesn't mean it's the best decision to invest inside of Charlotte, North Carolina. A lot of people are drawn to Charlotte because not only is it a growing city, it also has a strong local economy. When I first moved down in 2008, Charlotte was the #2 biggest banking city in the country. It was New York City, Charlotte, North Carolina, third being San Francisco, California. However, back during the 2009-2010, Wells Fargo purchased Wachovia. And as of today, I want to say that Charlotte, North Carolina is the third largest banking city in the country. It's New York City, San Francisco, Charlotte, North Carolina. With a strong local economy, also with jobs always coming here, IT jobs, good paying jobs, coming here, you would think like, yo, this is a great city to invest in. Oh, not so fast. Well, buying a rental property today in Charlotte, North Carolina, it's a difficult task to make the numbers make sense. And the risk is a lot higher. Me, I'm gonna advise against it. Without properly educating yourself on investing in real estate, you will come inside Charlotte, North Carolina and get financially hurt trying to buy houses and turn them as rentals. By the end of this video, I want you to have an understanding of all risks associated with investing inside of Charlotte, North Carolina. And also I'm going to discuss my strategy at the end of this video as well, and you could do what's best for you. Now, I moved to Charlotte in 2008. Okay, now from 2008 to 2024, Charlotte went to being one of the most affordable cities in the country to going through the housing crisis like everybody else. So for example, let's start from the beginning. In 2008, the neighborhood that I live in today, you probably could have got a house for $10,000 to $12,000. I know that might seem crazy to a lot of you guys. Now, if you're familiar with the university area of Charlotte, which is a nice area, always been a nice area, you probably could have got a house up there $40,000 to $50,000. If you were really doing well, you could have got a brand new house in the university area for $140,000 back then at that point. And that brand new house would be a 3-bedroom, 2-bath, or 3-bedroom, 2.5 bath if you got the upstairs, downstairs floor plan. I really started to get into the investment market probably around 2010. However, in 2008, I bought a rental property when I was working at a call center making $10 an hour because Charlotte was so cheap. I bought a property for $42,000, okay? So for me buying the property for $42,000, my mortgage was $350 a month, and by my mortgage being $350 a month, I was able to rent out that 3-bedroom, 1-bath for $750. So I was actually doing really well with my investment, almost making 2% rule. If you're not familiar with the 2% rule, the 2% rule is the house should rent for at least 2% of the purchase price. So at $42,000, 2% of that would be $840. I almost made it there based off of the Charlotte market being so cheap. But even at the numbers I got the property for, it was still great cash flow. My mortgage $350, I'm renting it for $750. I'm cash flowing $400 gross, okay? This doesn't account for the property management fees. And let's say the property management fees at that time was 10%. So it was 10% over the overall rent. Now, so out of that $400, I would have the property management fees. The $350 did include the taxes and insurance, okay? Charlotte, and I still think today North Carolina generally has affordable property tax versus coming from a New York, California, somewhere, or North Jersey or somewhere like that. Okay, so I bought the property. Out of that $400, my property management fees come out. Of course, you're gonna have a vacancy rate and your maintenance fees. However, if you, let's say the $300, right? If I'm netting a true $300 a month, right? That's $3,600 a year. At that time, that would cover if something went wrong in the property. It usually wasn't over, a $500 to $1,000 because I bought a house that was built in like the early 2000s or something. So it wasn't that bad, if that makes sense, right? The repairs wasn't major. My biggest expense would be turnover. And that's, for a landlord, that's your biggest expense is turnover, right? Because you have to paint the unit. You may or may not have to change the flooring, okay? You may or may not have to fix things, all right? But that's normally your biggest expense is turnover. So in that case, the house was carpet. So when I had turnover, I did have to, replace the carpet, etc., because the tenants would tear it up. But let's just focus on the numbers, right? I would make enough so that throughout the year, if I had a tenant stay 2-3 years, that I can handle turnover with ease, all right? 2009, I bought another property that I overpaid for, right? I paid $80,000, like $77,000 for a property in Charlotte, North Carolina, 2009, a neighborhood called Greer Heights. And the zip code, which is one of the hottest zip codes in Charlotte, 28205. I bought this house for $78,000, around there, right? That house rented out, 1% rule. This didn't meet the 2%, it was 1%, $800 a month, and my mortgage was like $600. I was cash flowing $200 a month before property management fees, vacancy rates, etc. And at the first few tenants, it was hard to keep them in there because that neighborhood was in a rough neighborhood. So there was always a lot of fix up over there. The house was built in 2006. I bought it in 2009. So there wasn't a lot of repairs, major repairs needed because all that was done. In Charlotte, North Carolina, throughout my years, I would buy properties, right? Properties for $70,000, $80,000, $100,000 there for, different type of properties from 1 to 4 units, okay? Now you fast forward today, right? Average 1-bedroom rent as of July 2024 is about $1,500 and some change for a 1-bedroom, and the price, and that went down. Average 2-bedroom rent is $1,800, all right? Now, that sounds good for the guys like myself who already own properties, and if I had turnover in my units, I can get these new rates, so that sounds good. However, the reality is those houses that I was once buying for 40, 50,000, we're talking, and I'm telling you the years, like this was 10 to 15 years old that I was buying for, 40, 50, $100,000, $120,000, things of that nature. On the low end, they're gonna be running about 300,000 low end. Okay, so let's take a 3-bedroom, 1-bath house, right? I bought it in a neighborhood called Hidden Valley. This was my first rental property, but I bought it in 2008, okay? In this particular property, it's a 3-bedroom, 1-bath house built in around 2000 or so, and I bought it in 2008. It was a nice vinyl house or whatever, a ranch style. And that house today, unfortunately, I sold it too early. But that house today, I checked it, and I was depressed as well, is worth $320,000, okay? So, but what does that 3-bedroom house rent for today? I would say that 3-bedroom house rents for today, you could probably get about $1,800 out of it, right? $1,800. Now, let's dissect that, right? You get $1,800 out of it, but if you bought that same property today and tried to rent it out for $300,000, your mortgage is going to be, with taxes and insurance, over $2,000 for something that rents for $1,800. all right? The house was only like 1,000 square feet. It wasn't like it was a big house, right? It was 1,000 square feet house, right? That'll probably get about $1,800, between $1,800 and $2,000, all right? That's what you're gonna get realistically. Yeah, you can throw it out there, but $1,800 to $2,000. And this is a neighborhood in a part of Charlotte called Hidden Valley. If you're not familiar with Hidden Valley back then, they had this stigma. I'm gonna say it wasn't that bad back then, but they had a stigma of the Hidden Valley Kings, which the Discovery Channel did a documentary on Gangland about the Hidden Valley Kings. So this neighborhood, it used to go down. It now is gentrified. It's a lot better. You got houses on the low end selling for $300K to the high end selling for $450. You know what I mean? In that particular pocket right now. Back to the rental numbers. You buy this house for $300,000, right? Let's say your mortgage is right at $2,000, right? I'm pulling that number out the air, but it rents for $1,800 to $2,000, right? For this 3-bedroom, 1-bath house. Before running, if you're paying $2,000 and it rents from $1,800 to $2,000, you already at a loss. With your vacancy rate, your maintenance, anything go wrong, like you're screwed. Don't let it be a big repair like an AC unit, $5,000 repair, because now you're in the hole for a few years, trying to recoup that $5,000 you paid. So the numbers, and this is $300,000 for a 1,000 square foot house in Charlotte, North Carolina. That's sort of the lower end side of the real estate, right? This is the lower end side. So numbers just don't make sense. And I bought a house, a COVID, 2020, I believe, or 2021. I bought a house for $100,000. It was a vinyl house built in like 2006. Bought it for $100,000. I said, this is a good deal. Put about $20,000 into it. It's a 3-bedroom, 2.5 bath, a 4-bedroom, 2.5 bath. I don't recall, but I know it's some bedrooms upstairs and the master's down. But that house today is worth $350, right? And that's the problem with, as investors, it's like, yo, at $350, it doesn't make sense. So what a lot of the investors are doing when they buy at these high prices, they have to do a fix and flip because the rentals don't make sense, right? The only people that these numbers make sense for in Charlotte, North Carolina is the people that have the Wall Street money, because they're working with retirement funds, right? And they're just looking for a return on their money. That's all they want, a return on their money. All right, because they just got to pay out retirements, and being that they have an endless supply of money, therefore they can go for a smaller cap rate that a normal mom and pop investor, it just wouldn't make sense. You'll go out of business. All right, if your mortgage is $2,000 and you got a rent in there for $1,900, you're getting negative cash flow, and that's what's happening in Charlotte. Days of finding properties under $100,000 are long gone. I mean, somebody could have land in like the worst place of Charlotte and want like $80,000, $90,000 for it. So it's a new game, and the rental numbers just don't make sense. So what do you do in this situation? Whereas, a cheap house is $300,000, and that cheap house only has one bathroom. So being that it only has one bathroom, you can only demand between $1,800 to $2,000, and your mortgage is probably going to be around that, right? So what do you have to do? Like, what's the solution for this? I was blessed to be able to grow with the city. I came in at the right time, but for somebody coming out today, you have to make at least $61,000 a year to afford a 1-bedroom apartment in Charlotte, all right? That's a 1-bedroom apartment, okay? That's what you have to make. Something came out the other day in Charlotte that said that you have to make at least $30 an hour, at least $30 to afford a 2-bedroom in Charlotte. Average 2-bedroom in Charlotte, we're looking at like $1,800. So that's the average number. So of course you could go to like areas that might be a little hood and get a 3-bedroom for like $1,800 or something of that nature. But that's the name of the game, and the numbers are not making sense for you to come in and buy today. So the solution is what I've been doing. My last few rentals, I've been buying on the outskirts of Charlotte, where the numbers still can make sense, okay? So instead of coming inside the major city with all the growth is actually I go on the outskirts, because what's happening is people inside of all of these major cities, not just Charlotte, Nashville, Atlanta, Virginia Beach, people have to move to the outskirts for affordability. All right, this is a true story, okay? Someone called me and said, hey, I have a Section 8 voucher. I need a 3-bedroom. My landlord is selling the property. I said, hey, how much is the voucher for? They said $1,633. I said, hey, just being realistic, you might need to start looking outside of Charlotte, North Carolina, because that's just not going to work inside of Charlotte for a 3-bedroom, $1,633. Even in my network, it's like, yo, everybody that has a 3-bedroom, they getting 18, 19 on up. You know, one guy called, he was like, yo, I got something, it'll be ready by the end of the month. I want $2,400 for it, okay? $2,400 a month for it. It was a 4-bedroom, 2.5 bath, and the voucher, they can only pay what the voucher's for. They can't be more. So I told them, hey, this person, you have to go out. Like Charlotte is just not affordable. So what happens with those people and people that are buying houses and they're qualified for $300,000, $350,000, you could get more house on the outskirts of Charlotte. So what I'm doing now is just beating the crowd and going to the outskirts so that I can get better returns on my money, all right? I'm just not gonna get a good return buying something for $300,000 that I can only rent for $1,900. I'm gonna be upside down. But if I go on the outskirts, and I did this deal about 2 years ago, I bought a property, a duplex for $140, put about $20,000 into it. I refinanced doing the burst strategy, right? The mortgage on that property, I believe is like a $1,400, whatever. Let's say $1,400 for the player safe. That property gets $1,200 aside, so I could cash flow $1,000, right? Those numbers make sense, all right? When you can do that, right? But inside of Charlotte, I couldn't do that. Every time I sell a Charlotte property, I always end up regretting it, because Charlotte, anything in Charlotte, you definitely want to keep. All right, so in conclusion, if you think you're gonna come down to Charlotte, North Carolina and take over the market, you have been sadly mistaken, my friend. You are going to lose money. And a lot of investors come down here losing money. The hedge funds, they know how to work it out because they're gonna hold the property over the long term, and they only need a small rate of return. Most people think that they are smarter than everybody else, and they say, oh, I'm gonna just go to the foreclosure auction. Well, the foreclosure auction inside of Charlotte, North Carolina, for a property that's worth $300,000, one of those fund guys is gonna pay $270,000 for that. And they're gonna fix it up and rent it out. Whereas you being a mom and pop investor, it just doesn't make sense. So learn your numbers, learn your neighborhoods, or just go on the outskirts of any of these major cities and start buying rental property around the areas around these major cities. The reason being is because people just can't afford to live in the major cities no more, and they have to go on the outskirts, and you could be a housing provider there. Now, what I want you to do, man, comment below, man. How has your investment journey been in Charlotte, North Carolina? Or have you considered investing in Charlotte, North Carolina? While you are commenting below, be sure to watch that video next to me. I'm Nasa, aka the real estate guru. I'm not a guru, I'm a doer, because I actually do this business. Peace.